Everybody, this is John and welcome to the free video. So one of the stocks I wanted to talk about here, this is one that we have been trading in the trading room and added it here on this pullback back to the mean. You can see here we got a low ADX, which is good, and we have a squeeze. And this is all very positive for a potential move higher. So, and this is one we've been kind of sitting on and been a little patient. So obviously it had a good run today. I like that there was some decent volume in it for the stock. I like that there's a squeeze. Now, in this case, we've got 10 days left, so we want to be a little conscious about feeding the ducks. So I would start looking at taking profits in this, and then not on all of it, we want to scale out, and then on the next pullback, rolling out to further dated options. Now, looking at a different stock here, this is one that I was looking at today, and CUDA, C-U-D-A. This is one where we had a nice kind of breakout today with a squeeze, and bigger picture, there's also a weekly squeeze on here. So ultimately looking for this to go through the old highs into its 1272 extension up to 50 bucks. However, unlike CYBR, which we have a shorter term trade on, right, and we've got 10-day options, for this one, this is one that we had picked up today, went ahead and got the July option, so 101 days out. So in this case, the idea here is that it's not a lot of theta decay, and we can hold on to this. And remember, with the weekly squeeze, that signal could last, 56 to 70 days, and this allows us the opportunity to kind of ride through that. So I like this. It's going to be volatile. I mean, this could certainly go negative. But ultimately, we've got a company here with a market cap of like, $2.2 billion, and it has the opportunity to kind of get something going there. So I like that for a longer term play. And then the big thing to keep in mind right now is I'm going to keep watching the stock market, and I keep also looking for something interesting to happen. And the volatility has been pretty low. Even when the volatility is, high here, I mean, the VIX has been staying really low, right? So we are in a pretty low volatile environment. And so one of the biggest questions I'll get asked is like, all right, so if you're in a low volatility environment, what's the best way to kind of sit there and make income and generate some revenue while waiting for kind of the next big trade setup? So one of the simplest yet unknown ways to make a consistent income, especially in a lower volatility environment, is through something called double calendars. And if you aren't aware, and again, just reiterating, one of the simplest ways to make money in income in a low volatility environment is with double calendars. And if you haven't heard of double calendars or don't know what they are, Bruce is going to be doing a class on Wednesday, April 8th. Okay, simpleroptions.com/double calendar. And this is one of those, it's a cool strategy that a lot of people just aren't aware of, and they don't even know how to put them on. And it seems complicated and it seems confusing, except when it's laid out the way he lays it out. It's like, oh, that's actually a simple tool that hardly anybody ever takes advantage of because they simply don't know how to do it. So he's going to go through, he's going to talk about the ins and outs of doing this, why you want to do it, step-by-step guidelines on how to do it, why you'd even want to incorporate this trade into your strategies, okay? And a lot of that has to do with consistency. He's going to have the step-by-step guidelines on how to do it, the top 10 common mistakes to avoid. One of the things that I've found is that when people get into something like this, they just assume it's like, oh, okay, double calendar, so I'm just going to apply the same rationale to options trading to double calendars that I would to something like a vertical spread, and that's not the case. So you want to know the top 10 common mistakes to avoid so you don't lose money on this. Tricks of the trade, how a double calendar can withstand wild market fluctuations so your returns stay consistent, and bottom line, at the end of the day, this will be recorded, so you don't have to be here live, right, to see it. But also, this is the type of strategy for this kind of class where you can learn it, okay? So learning something completely new, it's very reasonable with the goal that you could do a one-lot trade, maybe one or two one-lot trades, and pay for the cost of the class, okay? And it's just another tool in your toolbox so that you can look at various market conditions and choose the strategy that'll best fit that market condition to meet your goal, whether it's, especially if it's income related, which this one is looking for. And I always just think that in my own trading, it's while waiting for kind of the next big setup, is having income coming into my account, whether I'm taking that money out of my account to live on, or whether I'm just kind of slowly seeing that equity curve grow. These are the kind of strategies that I like. And then when something bigger sets up, great, I can go and do that. So anyway, hope it helps. Again, the whole idea here is consistency, consistency, consistency. You guys have a good night, and we'll see you at the next update.